Many experts are predicting a housing market crash in Australia in the coming 18 months. But there are a couple of fundamentals that we believe will support the housing market during this period. And here they are. Number one, population growth. Strong population growth over the past couple of decades has underpinned the housing markets. On average, over the past couple of decades, around 350,000 people have come into Australia each year, which means around about 180,000 dwellings, new dwellings, are required to accommodate these entrants. Now, with COVID over the last 2 years, our borders have been shut and population growth has been near zero. But the borders are now reopened and migrants are starting to come back into Australia, and we expect at least 200 to 250,000 migrants a year for the next couple of years to be coming into Australia. Where is the housing supply going to come from to meet this demand? This brings us to point number two, housing supply. With rising construction costs and considering just how long it takes to build large towers or estates, we expect shortages in the next couple of years as many developments don't actually get out of the ground or come to market. Where then is all of this increased and oncoming demand going to stay? Number three, interest rates. Low levels of interest rate leads to more demand by making access to money cheaper. More demand with limited supply leads to upward pressure on house prices. And this is what we've seen over the last couple of years. Now, even though the RBA has been on a rate rise rampage, you know I love that, interest rates are still only at 1.35%, which is still well below pre-COVID-19 pandemic levels, and thus we still believe will support demand for the coming 12 to 18 months. Number four, renters. Most people don't realize that we are currently undergoing a rental crisis around Australia, with vacancy rates below 2% now the norm in almost every suburb and town. With increased demand, it's pretty reasonable to assume that rents are going to continue to rise and have been rising right around Australia for the past 6 to 12 months. We believe that this will continue for the next 12 to 18 months and should also contribute to increased demand for this investment class. Which brings us to the next point, investors. Investors are back, baby, big time. Work the logic with me. First of all, you have a huge price gap between the average house and apartment in Sydney, currently over 80%. This has created unaffordability, which has meant that more and more people are now having to look to either stay and rent in their apartments or look to buy apartments. Now, as population growth increases via migrants who traditionally rent before they buy, there will be more pressure for rental accommodation, meaning more upward pressure on rental, meaning more upward pressure on rental yields, which makes the property investment asset class more attractive to investors. And as investors come back to the market with still reasonably low levels of interest rates, more investors means more demand with limited supply, as we've spoken of, means increased prices. And this is one of the key factors we believe that will underpin the housing market in the coming 12 to 18 months. What do you think? Like or share for more tips.